Hello, it is the 20th day of December 2012. It is a Thursday and another bloodbath for the silver market, down 121 or about 4%, breaking down below the 30 level down to the lower band area, which is set at 29.68 right now. It's also below 30 or at levels not seen since around the 23rd of August. So it's pretty much at 4-month lows right now. And I was stating back that the day that things started to look bad was this red candle in here, where it retraced a little too much or more than it should have on this retracement after barely making a new high. And then from that point forward, you had this sideways consolidation. Down she went. So therefore, let's take a look at this on a little bit of a longer term time frame, 73-hour chart. And the 73-hour chart is used because I want to go back to the September 2011 lows, put them on the left side of this chart. And you have the pretty much triple hit area of 35, although the Fibonacci retracement high will be the high of 37.50. And I've talked about these highs and these lows. And question is this area still going to be a higher low to this mark in here? And then if it is, how's it going to follow through? Because obviously this high is lower than this high, and this low is going to be lower than this one. So you do see those patterns of lower highs and lower lows. And now the possibility for a failed breakout is potential. And the size of this failed move is pretty big, so the fast move should follow huge. But before we get into that possibility, it's still in this sideways consolidation period until there's a clear break below 26. We're still in this confirmed just nonsense neutrality mode more than anything. Now, the big kicker is back in the year 2008. That's when this information for fiat currency was widespread, and really how it was the biggest fraud ever, the biggest fraud in the history of this planet. Now, I would have thought that it would have taken anywhere from about 10 to 20 months for people to widely figure this out, understand that 911 was a big part of it, and all, yada, yada, yada. Well, that hasn't been the case. So because the, we'll call them the NWO, is able to do whatever it is that they want to do because of complacency, well, who knows how this thing is going to play out as we move forward. Let's move on to the gold to silver ratio. And let me just, the 58-hour chart we're going to go, which will bring us back down, pretty much the year-to-date chart, starting with the key lows, key highs. This will be the key level until it either breaks down below the support or below this high. This is what we call a double bottom formation, and it is a bullish formation for this chart, which would be bearish for gold and silver if, of course, it follows through. And that's where you make a little cup handle like this, and then you come back down close to the previous level. Yes, it technically broke below it, and then you're back up and you're out to the previous resistance. So that's exactly what the case is. If we take a look at the size of this pattern by just drawing a simple little box, something like this, then it would give us a pretty much a target up to the previous high, which is set at 59 1/4. But again, how it's going to play out, we'll have to wait for the message of the market to play out. Given the short-term Fibonacci levels, we're at a key significant level here. And on the last chart that I showed, the 73-hour chart, this 30 level I've talked about so much is also a key level. But on a bearish level, you can almost, or even bullish for that matter, you can say it's both bullish and bearish now at this point for silver to have a rally of maybe $1.50 even, go up to maybe the 31.5 level, which is a key level, because if you see something like that and boom, it's going to not look good basically. And when 26, if of course it comes, but I'd said the same thing last year, I'll be saying this thing could very easily be having a decent shot of breaking through and then having a fast move down to the 20 area, which would be an additional 25+% off the price action. But then again, I thought like in 2008 that people would actually understand this enough to be able to make changes, because quite frankly, if people want a real true economic recovery, then they have to do it themselves. And it doesn't look right now that it's going to happen anytime soon. So I still stay hopeful that it will, but I'm still not sure. So thank you for tuning in and take care. Bye-bye.